The dollar is sending a signal right now that historically means something. Breaks. No one's talking about it. Not the news, not the analysts, not the people who should be paying attention. But the pattern is there, clear, undeniable. And it's the same pattern that showed up before every major financial crisis in the last 40 years. Here's what's happening. The dollar isn't just strong, it's too strong, and it's strengthening in a specific way that creates pressure in parts of the financial system most people don't see. This pressure builds quietly, then it finds the weakest point, then something snaps. Every time. The mechanism is simple. When the dollar surges, it creates stress on anyone who borrowed in dollars but earns in other currencies. That's a lot of people, companies, banks, entire countries. They took on debt when the dollar was weaker, when repayment looked manageable. Now that same debt costs far more in their local currency. Revenue stays the same, debt payments spike. The math stops working. First, they struggle. Then they default. Then the defaults spread. This isn't speculation. This is what happened in the Latin American debt crisis, in the Asian financial crisis, in the emerging market turmoil that keeps erupting every decade or so. The warning sign is always the same, a dollar that's too strong for too long. And right now, the dollar is both. But here's why no one's talking about it. The pain hasn't reached the center yet. It's happening at the edges, in countries most people can't find on a map, in markets that don't make headlines, in corners of the financial system that seem disconnected from everyday life, until suddenly they're not. Because the global financial system is connected. Debt held by banks in one country is owned by investors in another. Defaults in emerging markets hit pension funds in developed ones. Contagion doesn't respect borders. The stress building at the edges eventually moves to the center. It always does. Right now, you can see the early signs if you know where to look. Currency interventions increasing, reserves being burned to defend exchange rates, countries quietly restricting capital outflows. These are desperate measures. They're what governments do when they're trying to prevent crisis. They usually fail. Not because the governments are incompetent, because the force they're fighting against is too large. When the dollar strengthens, trillions of dollars of capital shift. No single country has reserves big enough to counter that. No central bank has firepower sufficient to stop it. They can slow it down, they can buy time, but they can't reverse it, and time is running out. Here's what makes this moment different. The dollar is strengthening while global debt is at historic highs. More debt means more vulnerability, more borrowers on the edge, more points where the system can break. And it only takes one break to start the cascade. A major default, a currency collapse, a bank that fails because its foreign loans went bad. Any of these can be the trigger. Once it starts, the mechanism is predictable. Panic spreads. Investors pull back on anything risky. Credit freezes. The crisis that started somewhere else becomes everyone's problem. We've seen this movie before, multiple times. The only question is when it plays again. Now, some people hear this and think, well, the dollar is strong because the economy backing it is strong. That's good, right? Not necessarily. A strong economy should produce a strong currency, but a currency that strengthens too fast creates instability. It breaks things, and what it breaks first is always the most leveraged, most exposed, most vulnerable parts of the system. Those breaks then propagate. The other issue is that the people making decisions don't see the full picture. Central banks managing the dollar aren't tracking every company in every country with dollar-denominated debt. They're looking at domestic indicators, domestic employment. The stress building internationally is outside their view, outside their mandate. By the time it shows up in their data, the crisis has already started. That lag is dangerous because early intervention could prevent catastrophe. Coordinated action could relieve the pressure. Small adjustments now could prevent massive disruptions later. But that requires recognizing the problem exists And right now, the message is, everything's fine. The dollar is strong. The economy is resilient. There's no crisis on the horizon. That message is wrong. Not because the economy is weak, because the strength is creating vulnerability that isn't being priced in. Markets are backward-looking. They react to what already happened. They're not built to see systemic stress before it manifests. By the time the market realizes there's a problem, the problem is already a crisis. History is clear on this. Dollar strength beyond a certain threshold doesn't signal confidence, it signals danger. And we're past that threshold now. The question isn't whether something will break, the question is what breaks first. Will it be a country that can't roll over its debt? A corporate sector that collapses under repayment costs? A banking system that took on too much foreign exposure? Any of these can be the trigger. And once it starts, the fire spreads fast. The tragedy is that this is preventable, not completely, but manageable. If policymakers acknowledge the risk, if coordination happened early, if the dollar's strength was treated as the warning it is instead of the victory it's being celebrated as. But that's not happening, because the politics don't allow it, because admitting the dollar is too strong sounds like admitting weakness, because short-term thinking dominates long-term risk management. So the pressure builds, the warning goes unheeded, the system moves closer to the edge. Most people won't see it coming. They'll wake up one day to news of a currency crisis or a default or a market panic and wonder how it happened. It happened because the signal was there and no one was watching. The dollar is flashing red right now, not because it's weak, because it's too strong. And in the global financial system, too much of anything breaks something. The only question is, what breaks first, and whether anyone will be ready when it does.